As for US dollar Japanese yen pair, well, last week it was also moving rather fast. It managed to break above 2016 resistance line. We have spoken about this line for quite a time, and finally the pair closed above this mark. However, as we can see on the chart, the pair didn't close near its weekly highs, and September highs near 104.30, 104.20 turned out to be a significant resistance for the US dollar, and we now need to see close above this mark to actually confirm that the trend in dollar yen is aiming for higher levels, is aiming to reverse its dynamics. For now, we can see some more sideways trading between 104 and 100 mark. Here we have a kind of corridor. It is important to point out that Japanese monetary authorities are probably really glad that the demand for the yen has weakened, as it seems that they are not able to generate the yen's weakness on their own. A weaker yen should help Japanese exporters and encourage their too low inflation. At the same time, the current situation emphasizes that the Bank of Japan lacks power to influence the forex market. We can see that the reaction to the Bank of Japan's policy adjustment was much less strong than the growth of dollar and yen, which we witnessed last week. Let's have a look at the daily chart. Here we can say that the pair returned below 100-day moving average at 103.60 last week on Friday because of the weak and non-farm payrolls data, and now this is important levels, and both have to overcome this level if they want to continue growth. Next resistance, as I have already mentioned, is in 104.20 mark. If this level is successfully broken, then we'll look at higher levels around 105, 105.50 and 106. The board is located near the area of 102. This is the previous resistance and now support line. Also, this is the bottom of the daily Shimoku, and not far from that is another support in form of 1,500-day moving average around 101.70. Note that even though dollar yen can keep trying to show short-term gains thanks to the external environment such as higher oil prices, the longer-term bullish move will unlikely be sustainable, as there is no additional fuel provided to the pair by Japanese side of things. The Bank of Japan's monetary authorities don't cheer the market with news of new monetary stimulus packages. It seems that the Bank of Japan has run out of options and has nothing more to offer. At least this is how market is perceiving the situation. So the pair really lacks bullish driver from Japan. And of course, the US dollar can strengthen on the expectations of US rate hike in December, but this growth won't be as rapid as it would have been if Japan was successfully easing policy, if the monetary policy of the Bank of Japan hasn't been already that loose, and if the regulator really had opportunity to act in this field. But it seems that it doesn't, so This is why the upside for the pair should be limited. There won't be many news from Japan, so focus on the US releases. On Tuesday, Japan will publish current account figures and economy watcher sentiment. Tertiary industry activity is due on Thursday. Also watch China's trade balance on Thursday and inflation on Friday, as these figures will have an impact on the market's risk sentiment and consequently on Japanese yen.